Kabir, great having you as always. Thanks for taking the time out. I hope all is well. It's been a while, so thank you for joining in.
Yeah, lovely to see you, Neeraj. And yeah, Somik did a great job
Yeah, yeah.
of giving a very, very good, succinct summary out there.
Yeah, thanks. So, Kabir, let's start with that, right? I'll start off with the how do I say the pickles, if you will, and let's start off with the operational metrics. So you can sum up the quarter, but the one question out there in the quarter will be that the Q4 EBITDA numbers or margin numbers came in lower than what was penciled in, right? Now, what led to this, and what's the outlook there?
Yeah. I mean, before I talk on the EBITDA for the quarter, I actually would like to zoom out. This year has been a very, very important milestone year for us. We had announced a few quarters ago that we are doing a strategic review of our non-core assets. The ATM business we announced last quarter, we closed it this quarter. So I'm quite delighted that that is now in the hands of someone who will take it to its true potential and value. So that was one big tick. We have been, in this program talking much about our real estate strategy. Now we are already starting to see monetization of land. We've been doing small parcels. In the past, there was one large parcel about 850 crores, which again was there in the public domain as we went for shareholder approval. So that's also it's starting to fructify. We've also taken action on Debt Foundry. We got out of some onerous contracts and loss-making contracts in our transformation services business. I think we are making some excellent progress in freeing up the bandwidth for management from all of these non-core activities so that we can focus back on growth. So I'm delighted to see that the data revenue this quarter has actually delivered a 4% sequential growth, which is kind of one of the highest that we have done, and which sets us from a growth perspective going forward. This is amid the kind of macroeconomic uncertainties that we've been witnessing as well. With that said, I would say the margins for the year as a whole has been in the range that we had indicated to the market. We said we will be in the 20% range. We are closing the year with 19.8. So I'm happy that we have delivered what we said for the year. For the quarter, yes, there have been some, as Shawnee pointed out, there are certain cable cuts. This is the first time ever that we had 3 cable systems go down in this year, all together at the same time. Various issues. Also, the time to repair was unusually long because of the geopolitical conflict and things that we all know of. So those were the costs. We did launch one of our cloud platform Vayu, Tata Communications Vayu, very recently as well. So there were a little bit of a step up in marketing costs. So I would say when I look at the delta of what is the drop of margin from previous quarter to this quarter, quite cognizant of the cost that actually went in and completely in control.
But okay, appreciate that. But did you in the previous call speak about your ambition to improve margins to previous levels of 23 to 25, and therefore is that a possibility in FY26?
We will make progress towards that, Neeraj. Our ambition of 23 to 25 stays, right? I mean, I believe that this business should operate in that particular range. If we unpeel, why did we depart from when we were at the middle or north end of the range a couple of years ago? We departed for 3 reasons. We departed because we made acquisitions. We made 3 acquisitions, and all 3 were loss-making acquisitions. So the mathematics of it took about 3.5 to 4 points, down just on account of that. From the very top end, at like 25 that we were, declaring a few years ago, I mean, that was because of COVID savings, and all of those things have now vanished, and we've now come back to normalcy levels. And then finally, as outlined in both in the Investor Day last year and also in subsequent quarters, we are making continuous investments organically as well, right? We are investing about $65 to $70 million of organic investments in fueling innovations, including, we talked about AI cloud and launching of our AI studio. All of this are not yet yielding, revenue for us. So these are all in the investment phase for us. Are these the right thing to do? Absolutely, yes, because we are in the digital space. And if we do not fuel innovation, we will become irrelevant in a couple of years' time. So I wouldn't be myopic about what is the margin today, because these investments are being made to keep us relevant with our customers.
That's a fair point, Kabir. Hi, Tamanna here. Very good morning and good to talk to you again. I completely agree that you can't be myopic in the space that you are in. You have to think of the bigger picture, and of course, companies in that space do it. The only tricky bit is to get the timing right. So the AI innovations you're talking about, the cloud you're talking about, you're in a space with a low moat and very tight competition. Do you have a time period in mind when all of these plans become revenue accretive?
Tamanna, each of the products have a certain, milestones that we internally measure by. See, on specifically talking on AI, I would say we are in a very experimental phase. The corporate use cases are still not that clear. So everybody is dipping their feet and testing their waters. We have the capacities, we have the capabilities, and we are inviting people to come in. And in fact, a lot of offers that we are doing are completely freemium to start with, as well, so that people can come and test this out. And once those use cases are established and organizations see benefit, as a result of it, I'm sure this will come through. So I don't want to throw the baby out of the bathwater as yet. So we made the initial investment of 1,000 GPUs. We will make now further investment only when we see revenue coming through. But the initial investment of 1,000 GPUs, I have put in so that unless until I have those capacities, I won't be able to invite customers to come and even try it out to start with. So that's the kind of cautious approach that we are taking on. And that approach is very different from product category to product category.
Okay. So then what is going to be the revenue driver for you? What is the outlook on deal wins? What is that pipeline looking like? And where is the revenue driver coming from?
Yeah. In fact, when we announced in the first 2 quarters of the year, we had the largest, order book ever. And that's why we see, that revenue coming through in Q4. Our revenue drivers are quite clear. We will continue to focus on core connectivity, and we want to take that business. This quarter has been a little soft, 1.6% growth on core connectivity for various reasons of cable, that I talked about. We want to get that back into the 4, 5, 6% range, low to mid digits, single digits we talked about. Then all the digital platforms and services this year we grew at about 30%, as a whole. That needs to again step up as well. So that will also, yield. Then if I give a geographic cut, we've again said India, we will like to retain our market leadership. In international markets, we will step up and improve our competitiveness there. So we are investing in feet on street in the international markets as well. So those are the other dimension. And from an innovation perspective, we have launched Vayu Cloud. We will look at last mile zero connectivity. All of those new products are also coming in. So a combination of all of those things will result in both innovation-led turnover, product-led turnover, and market-led as well.
The clients that you lost because of the cable cuts, Kabir, because in the calls this is mentioned that you're trying to get some of them back. Any update that you can share with us?
We haven't lost anyone. It's just that we won't bill them if there is downtime.
Okay.
So they are already with us. So that revenue will come back up.
Okay, so no issues over there. I just want to talk about your non-core assets, and it's looking good on your balance sheet this time, monetization of non-core assets. But there's more in the pipeline. Is that part of the plan? And can you share with us any perspective on how you want to approach further monetization of non-core assets?
Yeah, absolutely yes. There is more in the pipeline, and I'll only be able to share when something is concrete and the board has approved and the disclosure permits us to do so, Tamanna. So pardon me if I'm not able to give you more details concrete than that. But of course, we will. I want to have 2 ways. One, there are some one-off identified assets. Hopefully, as we are able to make progress, we will disclose them. On top of it, I would like to, and I mentioned this when I was there last time with Neeraj in the studio as well. I want to have the discipline of a continuous review, of our assets, and everyone needs to perform. They will have very differential asks on a margin and a growth and a ROCE, but to their internal markers, they need to deliver. And if they don't deliver, then they are on the axe. So very, very clearly, we will be ruthless in pursuing the opportunities. and they need to deliver the returns for all stakeholders, our customers and our shareholders. So that focus will continue. So there will be an ongoing review of every asset, core and non.
Okay. And so, Kabir, just trying to circle the square, right, if you will, or square the circle, as the saying goes. What happens going ahead? Now, you've given me some idea about your ambition to take, let's say, operational metrics higher from where they are right now. Does that get coupled with comparable revenue growth as well? Is there some inkling that you can give amidst all of these challenges that the world is facing currently on what's the kind of revenue growth outlook that you have for FY26 and FY27?
I don't want to give a guidance or an outlook,
Color.
but I'll tell you our focus very clearly. If when we have the investor day, we will probably outline a little bit more. I want to move away now the direction from voice, which is declining, move away from non-core, where we have made some progress on subsidiaries, and then start focusing on data growth and data EBITDA as well. Because that's where the entire business is actually moving towards. So we'll be able to give more color on it. But we are currently sitting in a situation of extremely volatile, trade and geopolitical, situation, and every passing day, is giving us. Thankfully, we are not directly impacted as Tata Communications, but our customers are going to be impacted, and we need to work very closely. And I'm delighted because our products work both on the cost side and revenue side outcomes for our customers. So we have an opportunity to work with our customers to navigate these uncertainties. So with that, I would say positive that we should be able to sustain the growth momentum, that we have. And all the operational metrics fall into place only when growth happens. So the focus is definitely on growth.
So then this focus on data revenue and your earlier guidance, I believe, of doubling data revenue by FY27, which I believe was given in June 2024. Now, has the world changed sufficiently for you to alter that right now, or do you believe you will be able to do it with the focus that you have?
Look, the world has changed. Macroeconomic situations have been, quite of a headwind, with us. But we will talk more of it when we have the detailed investor conference in a couple of months from now.
Last clarification, Kabir, your margins, which we've seen this time round, any one-offs that have impacted that?
Well, I don't want to call off one-offs, Tamanna. At the end of the day, these are all business as usual. Every business is going to have one-offs, but we need to navigate those one-offs and still deliver the numbers. So I can give explanations, but these explanations are not justifications. So if we have told a number, we need to achieve those numbers.
Okay. No, I'm talking about your Q4 margins, your current ones.
Yes. As I explained to Neeraj, there were certain cable cut related. I mean, I think Shomit captured it exceedingly well.
Okay, right? So your cable cuts is the impact that you've seen.
No, that is one of them. Plus, we spent on marketing, as well. Plus, there were other things to help for the future as well. So all of those costs that went into the quarter.
All right. Thank you so much, Kabir. We always enjoy our conversations because you answer all of our questions with a smile, and we do what we do and you do what you do. So that works out great. Thank you so much. So, all right, that's the CFO of Tata Communications talking about the quarter gone by. Stock doing okay this morning, about 1% up.